Welcome back to the TD Ameritrade Network. I'm Oliver Renick. We got a busy week with Fed speakers, some data and more, what that means for the economy, and the tariff impact of earnings is going to be a big factor, of course, for some of the industrial companies that export. Guys, I want to bring in our guests. We've got Scott Bauer joining us, CEO of Prosper Trading Academy, and Tom White for a little trader's block here and Inside Out today.
Yeah.
So Scott, Boeing right now, though, it has the potential to seem like it could be a trade war weapon given its exposure to China, but right now this still seems like very much a Boeing story.
It very much is, and the news does not get any better. It seems like every day, every few days, there's something continual here. And you know, a while ago we thought that they got in front of the problem, and apparently they didn't. So the New York Times article, the exposure over the weekend that there's mechanical issues across all 737s. Man, oh man, I don't know when the ship, and that, you know, no pun intended here, the ship is going to get righted. Honestly, long term, if I'm a long-term holder and can close my eyes and wake up, 6 months from now, 9 months from now, I want to buy the stock here. Technically, though, there's no reason to.
You know, this is a pretty important point short term. I mean, you don't have to be, a market technician to look at the chart and go, hey, something doesn't look right here.
Right.
I mean, as we break through that, it's almost like there's now potential to take some of these stories more seriously, almost kind of like a Tesla does. I mean, there are reasons why people watch these chart patterns.
Sure.
You know, because when things soften up, all of a sudden the rest of the market becomes more sensitive to news.
I mean, the stock is trading now where it was basically at the beginning of the year. So if you look at it on a year-to-date basis, it's unchanged. If you look at it from where it was off its highs, prior to that, I mean, that's a huge hit.
Lower highs, lower lows.
Exactly. And that's why I think in the short run here, the stock has some potential issues. But if I was to play something out 6-9 months, I love it.
The short term here, I want to get to the long term here in just a sec, Tom, but on the short term as well, I think that's a good point. I mean, we've been kind of waiting for more weakness, haven't we? And when we talk about this company, why wasn't there more volatility? Why were implied vol so low in Boeing despite some of the risk?
Yeah, and I think you saw that over a 52-week period. It's at the lower 1/3 of its implied volatility. I mean, that is to say there's not earnings for a while. So that takes some volatility out of the picture. But the headline news and down every day and something else coming out. Now the small batch of planes that have these issues are going to get repaired. I think it's 40 to 50 planes in total. They've already found the blame, and SPR and Spirit Aerosystems was the blame for these slats on the 737. But if you take a broader picture of Boeing over the last 2 years, it's still up over 110%. Now, it's still got a backlog of 5 years, billions of dollars in their backlog. But how much more is it going to take until maybe a major carrier says, we just can't deal with this uncertainty anymore. We're going to have to cancel our order. I know it might be 2-3 years in advance, but that's a concern and that's a headwind. But take a look at that 292, 293 level, the lows that we saw in December. That might be, a base case scenario because it's 230 or 337 area right here is an area of support, but you could easily see that push down to that 300 level and just below it.
Well, we remember how quickly the stock moved to the upside at the beginning of the year, which I think becomes an interesting perspective to keep on it, which was, all right, did Boeing basically become this like momentum trade that was happening given its resilience over time, and how does that contribute to the potential downside? Because it was kind of rallying in the face of the tariff situation. It was rallying in the face of a lot of things, just given its market position, which is, of course, so unique and a bullish factor by just about every standard. But still, from the positioning standpoint, this stock sounded a pretty incredible run.
Unbelievable. And as Tom said, we saw the Christmas lows there below 300, which was, to me, it was a psychological level, that 300. So when the market started to turn around a little bit at the beginning of the year, people looked to, okay, what got hit the most? I mean, everything got hit, but what got hit the most? Boeing was certainly one of those stocks, and that became kind of that momentum trade.
Yeah. Tom, I'm curious, before we kind of move on to the broader space, for Boeing, when you look at that chart that's kind of at a precipice from the trading perspective, I mean, how do you approach that as a trader? I'm curious to get both of you guys' thoughts on this. I mean, do you bet on basically swings and volatility, or do you bet on a company that has basically, bounced back from every dip?
I mean, I think you have to look at it as a stock that bounces back from dips, but I'd be cautious of any headline risk. Like I said, anywhere down around that 300 level, you're probably safe to sell a put spread or something like that if you have that long bias here. But at the same time, volatility is not elevated as much as I'd like it to be. But if we do get that pullback, I mean, it's oversold on an RSI level. The death cross might come into play if you take a look.
The
at
options haven't taken off yet.
No, they haven't, and that's pretty surprising in here. I would play it short term if you're going to play it at all, just due to the headline risk. But stay risk defined in any name like this, just because of the ability for that thing to move on any news.
And I agree with that, but the big point that Tom made is volatility has not taken off yet. And so selling any sort of downside put spread, albeit, maybe you're safe around that 300 level or so, you're still not getting, I don't think, in my opinion, enough premium to really warrant the risk there.
Well, hopefully, if you do get that pullback towards 310, 315, any further pullback, you're going to see that pop
a little bit
in volatility, which would help selling put spreads or anything credit spread worthy to take a bullish stance to it.
It's got to wait for that spike in the vol, take advantage of it. Scott, I'm curious though, beyond this, given what happened last week with the U.S. now targeting Mexico as part of the trade situation, let's broaden this out for a sec. I mean, do you want to be involved in any big international companies at this point when there's apparently just a never-ending kind of list of where we might go for trade tension?
I mean, that's the big question, and I do. I mean, there's a little bit of a coin flip here because one side of it says, okay, these stocks have pulled back. They've pulled back for what might happen, not what is happening yet.
Right.
Fundamentally, things have not changed yet. They could very, very quickly. So I'm cautiously optimistic on a lot of these industrial stocks, a lot of these tariff-related stocks, but everything has to be risk-defined with very,
How do you
very
express
tight stocks.
cautious optimism in a view or a strategy?
Yeah, absolutely. You can sell some put spreads, but again, selling a spread, so you're risk defined. Many of these other industrials, you're seeing volatility actually pick up quite a bit. So you can take advantage of some additional premium here. You can sell some iron condors where you're selling both a put spread and an upside call spread and taking advantage of that volatility. Or you can buy some upside call spreads. But again, I say spreads because I don't want to get long volatility. I don't mind getting long delta, getting long some momentum, some bias to the upside. I don't want to get long volatility though.
Interesting.
The VIX at 19 right now, it's probably not at the best time, but I think that's the overall market where there's a lot of people pouring into these S&P 500 SPX options to the downside, getting that VIX up to 19 again, while individual names that might have some headline risk aren't seeing that pop in volatility that provides option traders a lot of. Now, just on the other side of that, you could say, well, hey, if I'm going to get my shopping list out here and volatility...
People are, with all the trade stuff, they're thinking these things have gotten beat up.
Maybe you buy an at-the-money call spread in Boeing to the upside to take advantage of that low volatility, because if you get that move up, volatility is going to get crushed, which will go against a long vertical. But at the same time, if you buy at the money or slightly in the money, you're going to see immediate rewards on that.
Well, here's the other thing I might offer, though, in terms of those with the industrial exposure. There's been some good analysis shown that since the trade war heated up, we talked to Paul Hickey of Bespoke last week about there are companies that they follow that have that export, revenue from China that they get as they send materials out. All that exposure abroad, those companies have gotten hit the most. But as a stock picker, the challenge now is basically to make sure you don't get value trapped, right? Yeah. Because while some of them might be down because of tariffs, others might be down because maybe a little pressure from this tariff thing kind of exposed existing weak hands in these companies.
And that's a really good point. And I think what makes it difficult is, you look at Caterpillars, you look at Deere's, and stock like that, and I don't think you can go in and play every single stock individually. Yeah. I do think you have to pick and choose, which makes it a little bit more difficult.
Yeah. All right. We're going to take a short break here, guys. Nice job. Scott Bauer, Tom White with a little trading talk for us. The CEO of Prosper Trading Academy will be joining on Fast Market today, as well as Tom White, our contributor on the network. We'll be right back.